Hello, everyone. Hope you had a wonderful trading week. We're going to go ahead and just jump into the dollar index here on the weekly time frame as usual. Really, not much to update here in way of what we saw, so I'll just go ahead and point out what basically happened and what I'm expecting to continue to occur here. So, as far as the dollar is concerned, it looks to me like, and again, it kind of confirms to me by way of failing to hold the 61.8 fib level that I like to use here, as some of you that have been following my channel for some time are now probably accustomed to. So again, the 61.8 fib has now acted as the resistance point. We've closed below it now, basically broken an uptrend line as well. But more so for me, what I'm looking forward to here is some interim chop to start off the week. I believe that we'll probably see some upside pressure to begin to try to challenge that 98.80 level again. 98.80, 97.80, excuse me, I misspoke there. The good thing is I caught it a lot faster than I usually do. Anyway, so I expect some upside pressure to retest the highs on Friday. Assuming that will fail, and I do think that we're going to see further push to the downside here, looking to challenge the lows that we put in this past week around that 97.30 level, 97.30, 97.22 to 23 level. Probably be some chopping in this area. I don't think that we're going to go ahead and give way. In the event that we do see a break below this low, we'll be looking for the next level low around at 96, 93 level, with further push possible down to around 96.70. And then I believe we'll probably be in for another push to the upside here, but we'll see if we hold, bounce, and then reverse down towards that 96 level. I am looking more and more bearish at the dollar here. Further downside still remaining outlook to that 94 level out in the next few weeks, months. So as far as near term, we're going to be kind of ping-ponging around in this area here between that 97.20 to that 97.80 level, I believe, and then we'll see if we can go ahead and hold here and bounce back up and challenge those levels again, or if we're going to go ahead and just fold from that 96.90 level down to the next level of support that I have, interim support at least, near that 95.98 level. Challenge that 96.80, 96.90 level. Failure results in a continuation of the move down to 94.10. So again, there's a lot of up and down that we're going to be seeing over the next this upcoming week at least. Doubtful that we go ahead and see that downward pressure at this time. I still expect to see a pretty confined range here between that 96.90 to, let's say, that 97.80 level. So there's going to be a lot of up and down here, but ultimately I do believe that we have now put in the top. Break above that 97.80 would be a further push back up and then potential squeeze up higher. Again, I highly doubt that's going to be the case. I do see the direction is down towards the 96.90 level, and then through that, we're looking at next level support around 96, and then a retest of that 96.85 to 96.90 to occur. So here's an update on gold, looking at the weekly time frame view. Now, this past week we did see some upside push, but I'm going to go ahead and have to readjust some things here, just by way of the way that we ended up closing this past week. This outlook is still what I would like to see in the future here, but right now I think it's best to keep it as close to the near term as possible. So let's just go ahead and dive into it. So what happened this past week? So this past week we ended up seeing a higher high, higher low. Obviously, we ended up closing again real body lower than the previous body's open. So again, that is bearish. So what I'm seeing here is further push by the bears down here, which each real body opening to close, which is this area here on each one of these candles, is trending down. I mean, clearly it's trending down. Conversely, what we have here from a few weeks back, we still have a few lows that we can kind of hold on to here. Now, in the event that we do see this break, now watch, again, you got to be really careful here because sometimes they'll do a fake break, test that double bottom, yank it back, and then all of a sudden you're in the middle of a short squeeze. So again, the bears did a pretty good job towards the latter part of the week. The bulls also did a fair job of holding up the lows. This upcoming week is not going to be any better by way of volatility. We're still going to see a lot of back and forth chopping. Again, like with the dollar I just pointed out, we're going to see some upside test, downside test, and then we're going to try to figure out which way the range is going to break. I don't know if it's necessarily going to break this upcoming week or not, but again, that remains to be seen and dictated by the market forces. So as far as near term, I am expecting to see a retest at least of the 1460 level with opportunity to test the 1453 level. And until we break out of the range of 1453, 1454 to about the 1480 level, it's going to be kind of just chopping around in this vicinity until a true direction is given. So until that happens, we're basically looking at price locked within this general range here, which is the 23.6 fib that I have from our more recent highs to our recent low here. So again, it's going to be kind of dancing around in here. Now, it is actually interesting enough to point out that we are trying to hold on to the mid fib distance. Now, some of you that are not acclimated with fibs, this is an area that I like to refer to as my no touch zone, where you're kind of just waiting for some kind of probability to develop where your trade setup can be made in a way, or your trade can be made in a setup that actually has a higher probability, and then you incorporate the risk versus reward metrics and so on and so forth. Whereas if you're in the mid fib distance, and mid fib basically means the low of this fib zone, the 23.6 zone. The mid fib is basically right here near that 1466, 1467 level, and as proven on Friday, was being heavily defended by the bears. So again, need to see how this really kind of develops here, but I do expect to see, and rightfully so, further downside pressure here, trying to hold on. Bulls will try to hold on to that 1453 level, and until we break either down out of this zone. If we break down, then obviously we'll be looking at 1410 down around 1400. In the event that we break above the 1480, then we'll start challenging that 1497, and then obviously upside from there in the event of that break of that 38.2 fib level. So again, very much so, a lot of chop that has to occur. Gonna have to see what happens. There's a lot on the table as far as economic news is concerned, more specifically with the trade deal situation. And what's happening is that on December 15th, we're supposed to see, U.S. tariffs, increased on China goods. We'll see China try to make a good faith gesture, and if Trump, caves and essentially follows suit, it kind of goes against what he was saying initially, which was that if he did not see any progress, that he was going to be allowing those tariffs to kick in. So we'll see, which way they decide to take this right now. I mean, obviously, just by looking at the chart here over the past few weeks, you see a lot of indecision. This past week, you saw, the bulls getting pretty excited here. Then they had that reversal of, or the anonymous trade, optimistic trade talks, headline come out. Again, it's a bunch of farce in my opinion, but it does dictate what happens. The algos react very quickly to that, and thus, does throw a lot of people out of their positions. So bulls, get hurt or squeezed, and then versus shorts squeezed. It was just a back and forth battle all week long. I mean, there's no other easy way to put it. Very, very choppy situation here. So again, be very careful. Watch for the break of the range. Essentially, is what I'm trying to say. 1453 and lower, then you're going to be heading down to like the 1410 to 1400 level. Conversely, hold the 1480 support level, challenge the next level, which is around a 1497 level, just shy of 1500. In the event that we do break above that, then we'll be looking at further upside. Other than that, if we end up holding the 1480, we'll be chopping up in this area here until either we break to the upside or we break to the downside. Obviously, if we hold 1480, in my opinion, as I'm more bullish, we'll be looking at an upside break back up into the 1500s. So again, until the range breaks, we have to just kind of play accordingly within the interim levels on the lower level time frames. Let's go ahead and take a look at crude. Crude had a very, very strong week this past week. I was expecting some further downside here. We had that OPEC meeting come through where they were looking to make additional cuts. And of course, we had a very strong and rightfully so squeeze to the upside here. Now, in the event that we do go ahead and break the 59.90 level, and it would be possible that we could see 60 prints, right? 60 to around 60.50 would be the level to watch for, and then you'd want to see that support level hold at this level. Right now, the way I'm thinking is we're going to be trying to break through that level earlier in the week, and then we'll see if we can sustain those highs. If not, then of course we'll be looking at another reversal here, and that'll be indicative upon a failure to hold that 58.50 level. Beyond that, if that fails, then we're looking at those 57.50s, which the bulls still have a chance to come in and try to challenge again those highs around 59.90 to 60 to 60.50 in the case of a break to the upside. So again, common theme here is we have a lot of type of range activity to watch for, and until we have a break either way, again, just keep an eye on those critical support levels, as I mentioned, and then that'll be the guiding force as to which direction that the price is going to be going, at least in the interim until further confirmation is made. Lastly, we have natural gas here. Natural gas, again, was getting pretty excited on the back of weather reports, of course, and most of you know I'm not a weather guy. Just focus on what the chart is showing me. The outlook is still remaining pretty much unchanged as far as I'm concerned. I still believe that in the upcoming weeks, we're going to be looking at that move back down into the 160s. Some of you think I'm crazy. That's completely fine. I'm just looking at what the price is showing me. So, what's going to be indicative of that move? So, the main key here is the 231 level here, holding the weekly lows here over the past 2 weeks. 2.27, 2.29, 2.3-ish area is the areas that you really want to make sure that hold up. If they fold, okay, if they end up folding, which is quite possible, then we'll be looking at that 2.216 with further bearishness to come into play at that time. Now, what I'm seeing in the earlier part of the week here, we should be looking at another push up into around 240, I would think. Maybe in that 245 level. And last week I spoke to 245. We ended up moving all the way up to 250. But then again, towards the latter part of the week, actually, I think it was Friday where it just got smashed back down to almost to the opening of the week. So again, not a very good look here. Bulls still have a chance to try to come in and try to push up into the 240 to 245 level. 245 continues to hold as resistance. Then again, the outlook is valid to the downside to test the recent lows back here in August around a 2.03 mark. That breaks, then obviously we'll be heading down to the 163s much faster than I expected. So if anybody has any questions, comments, or concerns, you can reach out to me directly, thetradersperspective@gmail.com. Check me out on the website, thetradersperspective.com. Be happy to answer any questions you have or comments regarding any analysis that I have provided. So till then, till next weekend, I will hope you all have a wonderful and green trading week.